Good morning, good afternoon, or good evening. No clue whatsoever what time you're watching this, but for me, it is 4:12 a.m. on Monday morning, May the 6th. For most of you over there, it is still Cinco de Mayo, 4 o'clock in the afternoon on the East Coast. So I'll do what I can to keep this short so you can continue to enjoy your tequila and taquitos and everything else like that and go on about your day because things have been changing. I've been explaining or sharing my data over here on how it's been 117, 118, 121, 115 degrees the last 4 days over here. And of the five wells that I have on my property, two of them are completely bone dry. Never, ever have I experienced anything like this in the 18 years I've lived out here. However, as you may see if you are on X, Kenya flooding is trending. And Kenya, again, Kenya being in Africa, which is very historic for being very dry, are getting absolutely hammered with rain. And it's going to continue. So I am not a climate change fucking, thumb table pounder, not in any way, but I've shared with you guys quite a bit who have done one-on-one calls with me. I've got the opinion that during that 2-3 week period when COVID shut the entire world down and there was absolutely no traffic, no air traffic, some things got switched up. So as you guys are heading into summer, just be very aware of that temperatures and weather is not the same like it used to be. Again, sharing that information with people who've done one-on-ones. We had 0 typhoons last year. 0. Again, 18 years here, I've never, ever experienced that. However, if you are going to go on X and you would like to go down the rabbit hole that I have tried to share with you of what is coming, go over there and just on my 32 trades, go through and you'll see a couple of retweets that I shared. This one from Jedi Marcus will scare the absolute shit out of you if you go and read this link. These here are, again, just a couple of comments made out there about the upcoming central bank digital currency and what it is that it is going to change your lives, which is why I stress very much the big picture, not the narrowed in picture of what's going on, because you better get your shit together or you are going to be in the shit. So I will start now. I don't know how many minutes of your time I've wasted. Last week, jobs data on Friday, jobs, the big gap up, jobs. Again, we ended the week green, and we ended the week up 13.66 points. 13 points on the SPX. Literally a nothing burger week. We have now, again, keep a monitor on these things. We have now closed green for the month of May 2 days in a row. We are now green on the month of May. And I shared a bigger, wider picture with everybody how I would prefer May is not a red month because I don't want to have 2 back-to-back red months. But we might not be able to avoid that as things start to progress into not only CPI, which is next week, not this week, into NVIDIA, which is next week, not this week, into OPEX, which is next week, not this week. And after that, we essentially head into our seasonality, which, as I've shared before, this would work perfectly for very identical to 2012, how we started our drop-off after the exact same run-up as we had Q4 of 2011, Q1 of 2012, where we wind up ending this correction sometime in the middle part of June. So where we're at. Again, 2 green weeks in a row. I will go over that importance as we move forward over on the spreads. More importantly, 3 back to back to back plus 1% days. So what I tried to share there in the email there on Friday, which we'll go over in a second, happened twice in 2023. Twice. Both times it took place. Number one was at the top when we were over there in February of 2023. Number two was over there at the beginning of the rally that started off of October 27. Both coming at FOMC days going into the jobs day. Both. And here we are having done it again. So without even having to blink or think or do anything, the moment that futures open up in 2 hours, buying the 5185 calls, selling the 5180 calls, knowing there is absolutely no fucking way in hell you are going to get a fourth plus 1% day. There's your easy blind mice trade for Monday, understanding that Mondays close red. And a red close on Monday, a close below 51.2779. That's where my money's at. That's where I narrowed in, microwaving a couple of dollar bills is where my attention is we will be closing below 51.2779 come 4 p.m. on Monday. Bring it over to the QQQ, and again, QQQ having had that humongous drop-off April 30th and again on May 1. Huge, enormous ranges. Bink. Closed green with the big gap up that you had there over on Friday and ended the week up 2 points. 2 points for the week. Started at 433. We ended at 435. Come over onto the IWM, which is our new baby. A lot of guys are loving this IWM. IWM with the big gap up above that 199.92. Open, high, low, close, all in the 200s. Closed below the open on Friday. And a big 2-point week. 2 points on the week over on the IWM. So it's a really slow week. There's not much out there other than some tiny little earnings. When I say tiny earnings, I mean they're not significant as far as weight or impact. However, any one of these that you want, I've got them all covered already. I've got them all charted up, and you may as well take advantage of it because this is the final week of TD Ameritrade. And next weekend, everybody with TD Ameritrade will be logging into Charles Schwab, and fingers crossed, all of the data, all of the lines, all of the Fibonacci's are all still there when they switch over next weekend. Because if not, I'm going to be busy the week after that drawing all of those charts all over again, every single one of them. And I'd actually enjoy doing that if I had to, but these are your names. You got Disney, Celsius Holdings, Datadog, Crocs, Rivian, Uber, Shopify, ARM, Robinhood, Airbnb, AMC. Please don't ask me about AMC. And then you end the week on Roblox on Thursday before the open. Warner Brothers, nothing there. And then you start getting a couple of decent names. Marathon, that's it. Blink, that's it. None of these at all that I would any way, shape, or form be aggressively spending attention on, including Wynn Resorts. I just wouldn't. Disney, Palantir, wouldn't do it. So I'll bring you on to the charts, and we will try and get this covered and finished with as quickly as possible. I'm on the big screen today because I want to be able to show a little bit of a bigger, wider profile on this. This is the SPX for last week. Boom, 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 boom. Monday, Tuesday, Wednesday, Thursday, Friday. And yeah, I was being sarcastic there in the email over on Friday, having gone through 2 sleepless weeks with earnings and everything else that was going on with the correction. Inverted head and shoulders, boom, and right you wound up. Wound up, like we said, wound up closing plus 12 points on the week. However, it does change our view as from what we had, and we're going to work on that here. So we had an ABC up here, with how we were looking, and now instead of this being a 4, it is no longer a 4, so we can remove that. This is no longer a 3, it is now a C wave, so that is crystal clear. Make that capital letters. And where we are here needs a lot of cleaning up, but what we've got here is we have our A wave. This is now our B wave down here. It is no longer what this is. And we will be looking for the C wave of this to end somewhere approximately as high as 51.8485. As high as. Bring over onto our retracements and see where we are with the, it's up to you whether you like the 76.4 or the 78.6, because they're both going to bring you to the same place. Possibly up there to that 51.91. Very possible. You can see your trend line coming off here off of the over the two highs. That would be a identical C wave, and bringing on here, which this is no longer valid, our view to the downside in the short term. So we will bring on our new existing Fibonacci, which will be here roughly. I'm not going to go into it in detail. And your C equals A would take you right up there to 51.84. It just doesn't get better than that. So I'll clean all this up as we move down, because these are no longer what they were. Instead of it being a 1, 2, 3, it is now an ABC. Boom, boom, and it fits into our bigger, broader picture that we were looking for, which would be a move to the downside in this month of April. May being identical to what August, September was back in 2023, where we kind of churn around, and then October being what June will be coming next month, where will be the bigger drop down decline to the downside. That's what we're working on. So these I will clean up. I won't waste your time on that. And move you over here to the QQQ. The QQQ, again, the exact same thing. Everything looked as if we had a 1, 2, 3, 4, with 4 being here. The gap up there on Friday negates that, so this is no longer a 4. Instead, we have now our, where are we? I know the drawing's down here in the full moon somewhere, so this is now our A wave, duplicate. This is our A wave to the upside. This is now our B wave on our drop, and we will be looking for our C wave, and our C wave should take us right up here to around 442. 442.86, 441 is where this wave should extend to. We'll go ahead and draw ourselves for an A, B, C equals A, and it will bring us, kabam, it just doesn't get better than that, right up there in between the two. Where does the 442.86 come out of? Again, need to fix this so that it is to the penny, but roughly you're looking at 441.58, and bring you over to the QQQ, and there's your 442.86, sorry, 442.26 being the bottom side of that gap from way, way back on April the 11th. So that's what we're looking at there, and you can see as far as the view on this, very crystal clear. You're looking at a 1, 2, 3 ABC, having here taken out the 1, so this is no longer a 1, 2, 3, 4, 5 ABC, this being the B wave to the downside, the drop that we had there, and on beginning of the week, and now we are going into the C wave. And from the C wave, I mean, we can call it what we want. You want to zoom in and try and work through it, we can do that. Let's go back, hang on, let's go back here, and we will go through this in a very tight little fashion. So boom, kaboom, kaboom, let's call it that, and we will zoom on out and see where we get with that, and that would take us right up here to around 438.72. So as far as this current little wave is, 448.72, 438.72 would approximately be our fit for this being an A, B, C equals A. So looking somewhere in that range, 438 up to around 442, for this to extend itself and then complete, and that would be the end of this ABC, and then we would be waiting patiently for the catalyst, which you've got NVIDIA next week, you've got CPI next week, you've got OPEX next week, and for them to take advantage of it and move it on to the downside. So we're done with this. I will now move over on to the quick little summary here on the futures, and looking here at the ES futures and a 10-day window. Looking at a 10-day, and as you can see here, boop, right up to the 50-day moving average, which is where we wound up ending there on Friday on our resistance on the SPX. Over on the Russell, a little bit of a break there below 50-day moving average there on Friday. And again, that's why we threw out the puts for next week on the IWM. They actually flipped pretty nicely on Friday, but bigger, wider picture on this. Right up to the 50-day moving average, and then crash back down and right at the 2024 open on the Russell 2000 futures. Over here onto the Dow. The Dow, again, having come down multiple times back below the 2024 open, which continues to just be where it suddenly gets a little bit of euphoria, a little bit of a bounce off of. Boom, 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 boom. And here you are right up to the 50-day moving average, which is where we stalled there on Friday. And then over here onto the NQ having been the big wallop burger because everything is in the NQ. That's the reason why you had a bigger, stronger decline on the NQ. Your bounce here coming off of the dink, having hit the 2023 highs, not once, but twice as we had the decline. 10-day view as we were resisting consistently right at minus 5% from the all-time highs. But bam, right there again as we went into Friday, and then the jobs report. Hello, bam, bam, bam. And anybody who wants to look at that chart pattern right there, you all know that is a chart pattern which is going to recline and bring you back down to where you began on it. So that's what we've got on that. And now I will start moving on to some other things that I've got to share with you really quick. So the SPX, bigger, broader, wider view, and the new moon. What I was expecting, hoping, was we would get the new moon low and then get our bounce. Instead, we're going to wind up getting a new moon high. The new moon being on Tuesday, the window for the new moon always being, it's an art. It's not a science. It's an art. Charts, setups, all of that have to match up with it. Plus or minus 3 days from the date of the new moon and the full moon. The new moon being here on Tuesday. So at some point this week, what should occur is we will wind up topping off on this wave. However, bringing you back to our data, going back here to the SPX. Where are we? SPX. SPX has closed 2 weeks green in a row. Keep that in mind. I'm going to move the mouse around, bring you back over to where we are. And we will go over to our president's chart because that's the way that I have mine charted out. And move on to, we'll go to the 5-year weekly. And there we go, 5-year weekly. This was an it was an enormous run, that move off of October 27. I had to literally go back to 1968, 1970 to find anything even relevant to that. Same here with the decline that we had of 7 weeks down in a row after we had that March high in 2022, the April high, March high, 2022. 7 red weeks in a row. We had instances of that prior, but this 9 green weeks in a row, unseen. Looking at the numbers alone, just the numbers, getting 3 green weeks in a row is not uncommon, but it's not very popular. So with this being 3, you've got your 3, 3, 3, 3, 3, 3, 3, all this prior to COVID. Getting a 3rd green week this week, a week that where we wind up closing above where we open here on Monday, would not doubt it. I wouldn't doubt it. I wouldn't look at it and say it's impossible, But what I would be looking at is, like we shared there before, the data. The data being that where we're looking at on this is for the SPX, highly likely to be reaching up into that 5185, 5190 area. Highly likely, highly probable. And just to stick with this, stick with the subject of that, as we began last week of May 3 watch, Monday's close red. You guys all remember what took place there on Monday. Monday, the trade worked out, and then they wound up bouncing it the last 12 minutes of the day. Monday's start of the week, they close red. Boom, boom, boom. As I put in here, SPX 5125, 5150, still very probable this week, and most likely Wednesday after Amazon AMD report prior to the FOMC meeting, Wednesday at 2 o'clock. That was exactly what we wound up getting. We wound up getting that move there on Wednesday. Oh, sorry, start of the week, and continued to decline. Unfortunately, we wound up getting it there on the jobs report with our big gap that needs to be filled. And again, this is no longer going to be a 1, 2, 3. I would be looking at this immediately now as the A, the B, and the C, where we've got A and AB. So there we go. I will be looking at this as a 1, a 2, this being our 3, and as long as we do not break down below this 50-30 area, sorry, 50-75, as long as we do not break down below that 50-75, this will be intact. So this gap cannot be filled. If this gap is filled, this bullish view for that upside into that 5184 begins to negate itself. It begins to negate itself even more on a decline below the lows there from Thursday. It eliminates itself if we do get a drop there below 5011. So bullish view is there. I would not in any way, shape, or form be looking at an aggressive entry point or even attempt to get up into that with, as we're seeing here, a 1, 2, 3 with a most likely, if we're going to look at a 5 ways here, this being a 4, somewhere right down into around that 50-90, 50-99 area. And then our final 5th wave up to the upside, which fits quite nicely just under that C equals A area. So don't want to duplicate that. It's 4 o'clock in the morning, dude. You don't have your shit together? What's wrong with you? So yeah, that's what we're looking at right here. Possibly a 1, 2, 3, 4, 5, but bigger picture being an A, B, C, most likely again up into that 5180 region, which from where we closed at 5130, you've got 30 or 50 points to the upside before you get the bigger, broader downside move coming into June, end of May, early part of June, but it should not begin for another week. Because again, looking at it from a broader, wider view, yes, this will change. This will obviously change, but we are still looking for somewhere down here around 4,800, roughly 49.19 down here to this 4,800 level. So nothing has changed as far as that goes. All that I've got to do, wiggle around some of these, and we'll get onto that after we get a top placed over here. So bringing you on to the final leg of what we're here to discuss, and that is, like we shared here, the weekly. 3 green weeks in a row, very possible. Very, very possible. Would be getting aggressively bearish in the short term. Obviously looking for a down day on Monday. Very little data this week. Very little data this week. A lot of Fed speakers. They drilled Jerome Powell big time on that press conference. These Fed speakers, they are not question and answer situations. Some of them may be interviews on CNBC if you Want to go through with that, but a lot of Fed speakers this week. There will be a lot of discussion about rate cuts, rate cuts, rate cuts, rate cuts, rate increases. IWM, bigger, broader view, 30 days, big drop down, right up to that gap, on Friday, drop back down. Again, IWM being its own little baby, how it's a little bit, I don't know, what's the word I want to use? Whatever. IWM, again, up in the 200s, nice little retracement down into the 199s, gap fill over here, and a press down on 199.40. There's big problems over there on the IWM. Come over on to Apple. Apple, the focus for me. Apple, July 19th, 180 puts. That's where I went into on Friday. The gap fills over here down below 174. So the math for me works out where this is a trade that I want to be in, because 180 minus 174 is 6. Minimum I'm going to be able to get, if it takes all the way until July for this trade to work out and fill the gap, I'll be making at least 50% on the trade. I'm obviously intending for this to happen much more rapidly than that. And throwing the studies on here, as you can see, the 200-day and the 100-day, which are inverted, bearish, with the 50-day well below, which has been for quite some time, all of that got fixed on this earnings report, where everybody's now looking at Apple and their buybacks. Bigger, broader view over there on Apple, like I shared, that 165, Apple gets below that 165, and the world is in for some serious shit. So that downside move after, with the earnings being right here at 174, this pop that you got is a blessing. Take it as a blessing. I don't like it for a weekly, but for the weekly, like I shared over there in the spread room, that 184.95 is your January of 2022 all-time highs. Zoom you out here so you can see a bigger picture on this with Apple. It's right where you're at. That's your January 2022 all-time highs, right up there. Do you want to play that you're going to get a little bit higher up here, get a push up into the 190s? Totally up to you. I'm looking at the downside move on Apple, who has no products to sell at all. Reporting this week, we will go through that quickly as I've got it up on my other screen. Where are we? Search earnings. And Disney reporting on Tuesday morning. Hey guys, don't forget, celebrate additionally today with your Cinco de Mayo, because we're 4 weeks away from Pride Month. I would think that Disney would change their reporting from May, or as this early as it is during the reporting period, to start reporting later in the reporting period so that they can actually take advantage of Pride Month and report their earnings during June. Disney going to be reporting there on Tuesday. Completely up to you what you want to do. I'm looking at a 90-day 4-hour. Look at it from a bigger, much bigger, broader picture. Disney is in the shit. In the shit. Just big gap from earnings. Big gap from earnings. Wow. Oh, yeah, because I got the daily here. That's the reason I'm seeing it. Big gap over there from earnings. Back over here in February. Jack, PC, you're the guys that are going to Disney. You're the guys who are making sure that their earnings, are to the upside. Uber. Man, Uber was a motherfucker, and then bam, they got added on to the S&P 500. Uber's decline over here from what I see best as a 1, 2, 3, 4, 5, with the 3 having topped, right to minus 20% from the all-time highs over there on the decline. I will never, ever jump in front of Uber ever again. Uber beat the shit out of me when it got that pop, when they got added to the S&P 500. Beat my ass. I'm not messing around with Uber. Uber reports after the close or before the open on Wednesday. Anything you want to do with Uber, you let me know. I've got it all set up for you. Shop. Boom, boom, boom. I mean, a piece of shit's a piece of shit. Here's Shop minus 60% from the all-time highs, and it will never, ever, 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 ever be an Amazon. ARM, Gilly, day 2 pre-market 70.59. The IPO opened 56.10. I wouldn't doubt you see an absolute sell-off over there on ARM. Wynn Resorts. Hang on a second. Wynn Resorts. Why is this the default? I have Wynn. Oh, man, I got way too much on Wynn. Wynn is in this old zone. Jesus, man. This is a 2018 close. Wynn is as bad as Boeing. Lyft, same thing. Got it all done for you. Anything you want on Lyft. What a complete and total piece of shit. I mean, it just doesn't get any shittier than Lyft. What do you want on Lyft? Let me know. And Roblox. I had a member who was very big with Roblox. So I've got a lot of detail on Roblox. And as you can see here, for the better part of 2 years, Roblox hasn't done a fucking thing. So I am going to finish you off here with this. This being my left screen, the left 55-inch TV, and what I'm here for is the bigger view on the 4 hours. 4 hour on the Russell 2000, not yet overbought, but very, very close to it. 4 hour over here on the Dow Jones, not yet to overbought, but very, very close to it. S&P 500, very, very close to overbought, but not quite there yet. And then your NASDAQ, again, very, very, very close to overbought, but not there yet. As you saw here, this is what we were talking about. These are your overbought levels when we mention it. These are your oversold levels where when we were here going into Fridays 2 weeks ago, I continued to keep mentioning how we are extremely oversold over there, and that was the reason why we had that green Monday. I will have to bring it out, and again, this was where your move came from. Your move there on Thursday and Friday, the 1% days, call it Wednesday. Wednesday, Thursday, and Friday had absolutely nothing to do with the stock market itself. It was all about the US dollar. The US dollar getting that slam back down below the support resistance line, right on back there to that 104.636 after we already had those yen scares going back a couple days ago. Bring you over to the yen. Same exact thing over here onto the yen. Zoom you out with a wider view, and that yen, just a miraculous move off of after it broke that October 2022 area. Right on up there and actually touched the 1990 highs and slammed on back down, right back to this October 22. Everything has been getting done with currencies. It's got nothing to do with people wanting to buy stock, buy into investments. You heard it from Warren Buffett over the weekend where he's got no place to put his money, nowhere. So shut you down on here. And again, go through the emails from last week, see where we're at. Friday with the jobs report, got your big blow up there. Here we are with what we're talking about with earnings for this week. And again, if you really, really want to go dig down into the wider view, long rabbit hole of what's coming for you, check out a couple of those links that I shared and retweeted over there on Twitter, X, and telling you, you got a couple years left. So get your shit together.